Here are the crypto top headlines covered in this video. Bitcoin ETF demand hit 6-month high while futures volumes remain subdued. Next, altcoin seasons will be weaker moving forward, says Analyst. Also, the case for Bitcoin as a reserve asset, says Bitcoin Policy Institute. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Bitcoin ETF demand hit 6-month high while futures volumes remain subdued. Spot Bitcoin ETF demand soars to a 6-month high, but BTC futures contract volumes remain somewhat subdued and could be a reason why the price is constrained. Demand for spot Bitcoin exchange-traded funds has reached its highest point since the Bitcoin halving in April. Meanwhile, interest among futures traders seems to be waning according to recent data. The volumes traded across all futures contracts, $35 billion per day, remain somewhat subdued, especially compared to the elevated volumes when the market peaked at the all-time high in March, crypto analyst firm Glassnode explained in an August 23rd market report. A significant impulse among futures traders is missing. The volume of futures contracts, an agreement between a buyer and a seller to sell Bitcoin in the future, is clocking daily figures approximately 50% of what it was following Bitcoin reaching its all-time high of $73,679 in March, when it exceeded $80 billion daily. The last time the volume approached $80 billion was at the beginning of August, when Bitcoin's price dropped 22% over 8 days, reaching $53,991 on August 6th. Glassnode explained that there has not yet been a significant impulse in trading activity and perhaps alludes to a higher dominance of single trade basis strategies and arbitrage positions within futures markets. Spot Bitcoin ETF soars, fueled by retail investors. Meanwhile, in an October 25th X post, Kai-Young Ju, founder and CEO of CryptoQuant, highlighted the spot Bitcoin ETF's 30-day change momentum indicator, noting that demand for the spot Bitcoin ETF has reached a 6-month high. Ju pointed out that net flows totaled 65,962 BTC over the last 30 days. Since the launch of spot Bitcoin ETFs in January, total cumulative inflows have reached $21.6 billion, according to Farside data. On October 25th, crypto exchange Binance shared research suggesting that retail investors are responsible for most of the demand for spot Bitcoin ETFs. In the report on crypto ETFs, Binance analysts shared that non-institutional investors accounted for nearly 80% of the total assets under management, or AUM, in spot BTC ETFs as of October 10th. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, altcoin seasons will be weaker moving forward, says Analyst. Popular crypto analyst Willy Woo says that the altcoin market cap is like the cricket bat that has had 10 new handles and 10 new blades. Crypto altcoin seasons will probably keep coming, much to the delight of speculative crypto punters, but the intensity of returns will taper off as the market matures, according to a crypto analyst. Alt seasons will be weaker each cycle on from the great 2017 alt bubble, pseudonymous crypto trader Willy Woo opined in an October 26th X post, referencing the year when the boom of initial coin offerings, or ICOs, a way to raise capital for a project by selling cryptocurrencies, began. Altcoin seasons will continue as investors chase higher risk returns. Willy Woo clarified he's not saying there won't be alt seasons, noting that there will certainly be mid-cap and low-cap cryptocurrencies pumping after Bitcoin's price surges as investors chase returns higher up on the risk curve. Traders usually watch for signs that Bitcoin dominance has peaked as a hint to start rotating capital into altcoins. According to TradingView data, Bitcoin's dominance is 59.31%, which is just shy of some analysts' recent predictions of 60%, which they believe is the point where capital will start to flow into altcoins. Willy Woo claimed that the current alt cycle is shaping to be about meme coins, which he opined is a piss take on the crypto space. The comments opposed those made by Matty Greenspan, the founder of Quantum Economics, who recently told Cointelegraph that the upcoming bull run will be all about Bitcoin and its layer 2s. Willy Woo warns against hodling altcoins. Willy Woo stated that there is no pretense that it's trying to be disruptive, world-changing tech, just an honest bubble casino, urging his 1.1 million followers to steer clear of long positions on altcoins. Don't ever hodl them unless you're so knowledgeable that you're an effective insider, because alts are an insider's game, just like the casino where the house will eventually win. He also warned that the alt market cap reflects the winners, not the failed tokens. Also, remember alt market cap is like the cricket bat that has had 10 new handles and 10 new blades. It's the sum of all the new winners. Losers don't count to the market cap, Willy Woo stated. Many crypto analysts have been speculating when the market can finally declare that alt season has arrived. While traders often believe Bitcoin must reclaim its all-time high, which is currently $73,679 reached in March, some analysts argue that alone won't be enough to trigger alt season this time. Crypto investment firm Hashkey Capital analysts believe altcoin season is more probable when Bitcoin's price surpasses $80,000. Our next top headline, the case for Bitcoin as a reserve asset, says Bitcoin Policy Institute. According to the paper, central banks collectively hold $2.2 trillion in gold as of Q1 2024 and continue to expand their gold allocations. A recent paper from the Bitcoin Policy Institute, titled The Case for Bitcoin as a Reserve Asset, argued that central banks should adopt Bitcoin as a reserve asset to hedge against rising inflation, geopolitical risks, capital control risks, sovereign default, bank failures, and international sanctions imposed by the United States government. Economist Matthew Ferranti, the paper's author, made the case that Bitcoin is an effective portfolio diversifier due to a weak correlation between the decentralized asset and other financial instruments. The economist also highlighted Bitcoin's lack of counterparty risk as an effective hedge against sovereign defaults, including the risk of financial sanctions, which Ferranti labeled as a form of selective default, impacting nations like Venezuela and Russia. Ferranti clarified that Bitcoin and gold allocations might not be the answer for every central bank. However, the nascent digital asset serves the same store of value and hedging properties as gold, particularly against rapid currency depreciation. United States politicians push for Bitcoin strategic reserve. The Bitcoin Policy Institute's paper echoed calls from presidential candidates and U.S. lawmakers to establish Bitcoin as a strategic reserve asset of the United States Treasury Department. Following former President Trump's keynote address at the Bitcoin 2024 conference in Nashville, Tennessee, Wyoming Senator Cynthia Lummis introduced the Bitcoin Strategic Reserve Bill in the U.S. Senate. The bill sets the ambitious goal of acquiring 5% of Bitcoin's total supply over time. In an interview with Maria Bartiromo of Fox News, Trump hinted at paying the national debt with Bitcoin, a nod to the supply-capped asset's power to absorb and transmute currency inflation into economic prosperity. MicroStrategy CEO and Bitcoin thought leader Michael Saylor praised the Bitcoin Strategic Reserve Initiative as the 21st century equivalent of the Louisiana Purchase. For context, former U.S. President and Founding Father Thomas Jefferson purchased the Louisiana Territories from France for $15 million in 1803, doubling the geographic area of the United States at the time. Despite the popularity of the strategic reserve idea among Bitcoin holders, not everyone is on board with the effort. Cardano founder Charles Hoskinson previously argued that while the adoption of BTC as a strategic reserve asset would boost the price of Bitcoin, it would also allow state actors to influence the Bitcoin network. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.